cross over now to Ghana to talk to Winston Nelson, he's CEO of African Alliance Securities. Winston, a very good morning to you, a bit early for you out there in Ghana. Let's begin perhaps by talking about the biggest event of the week, which is the MPC meeting that's due on some time this week. What are you expecting?
Well, I think essentially from the MPC's point of view, the economy has been relatively stable. The last time they cut the rate marginally, I expect a very marginal reduction in the rate as well for this meeting that they are going to hold, essentially because the numbers that have come out so far essentially warrant some form of reduction in interest rates.
So the last time that the bank said, we saw that 50 basis points decrease to 13%. What's the magnitude of the decrease that we're likely to see, do you think?
Well, I think essentially it will be around the same thing. They have been a bit cautious on the backdrop that we have elections next year. Definitely government will at some point start to push spending to make sure that some form of re-election would come to play. So they're mindful of that. I don't think they're going to go for a big cut in interest rates based on this.
What should it be, though, in your book? Should it be a 1 percentage point decrease? Should it not decrease at all?
Well, I think it's going to be around the 50 basis points that we saw the last time. It's going to be around that. 1% is possible, but yeah. I don't really think that is what they would go for.
Yeah, but what does the economy need?
Well, essentially, the economy at this point, we need to push interest rates down further. We think that the economy has been stable for some time. We've all been waiting for oil revenues to come through. They've started coming through. The books looks good. So at least at this point, we would like government to see central bank to cut down interest rates so that businesses can make plans and invest and boost the economy. So I think business and in general, analysts will want to see a much steeper cut in interest rate than we have seen.
Yeah, but at the same time, Winston, we've got producer price inflation around 23.8%. That was the number for May, while we've got CPI at 8.9%. So on the CPI front, certainly there is that big gap between your official interest rate and the inflation number. But on the PPI front, it suggests that things are getting a bit heated there.
Well, in terms of the PPI, I think yes, it's generally been that high, but you notice the huge gap between the PPI and the CPI. Businesses almost always complaining about a high cost, and one of the key things has to do with the interest rate that banks lend to them. So I think one of the key things would be a reduction in the rate would definitely help even bring the PPI numbers down further.
But I suppose we must also not forget that this is a growing economy, and this is an economy that is seeing oil coming into it, oil revenues coming into it for the first time in its history. To what degree, though, would you say the growth that we have seen, 5.1% in the first quarter, isn't as close to the double digits that people were talking about? To what extent is that a result of the high interest rates or the unrealization of the expected inflows that were supposed to come with the coming of the oil production?
Well, I think 2 weeks ago, the Statistical Service released numbers for GDP growth. The first quarter, if you put first quarter 2011 to first quarter of 2010, you see about a 23% increase in GDP growth. So just looking at the numbers in that way, you see that definitely there has been some big push on the GDP side. So far this year, and then based on the numbers they released, if you look at first quarter 2011 and compared to the fourth quarter of 2010, there was a decline in GDP, which they explained that is the natural cycle of GDP in Ghana. I think the oil revenues definitely would show by the end of the year. What has been happening is that government has been very careful to watch its spending. So we've not seen the big push that we normally would see from government spending that will feed into GDP growth. And that has been the challenge. I think in the second half of this year, government is going to address that issue. If you will recall, they've announced that they're going to do a 5-year bond, which is the last time they issued a bond like that was somewhere in 2007.
Yeah.
So that is more like signaling to you that government is going to start spending because the election is going to come through and they would they would want to definitely touch some major projects that will boost their chances of re-election.
Yeah, let's quickly talk about the equities market, Winston. The market was closed on Friday for a public holiday. What about today? What are we to expect, particularly ahead of that MPC meeting?
Well, I think usually in the week that MPC is meeting, we tend not to see huge price changes on the capital market. Essentially, I think it's going to be a period, one of the normal period things that happens in Ghana when we're waiting for quarter results. As you will recall, the first half of the year has ended. We're in July, which is really the month where the companies start to release results. Most investors are cautious around this time to be sure that the decisions they make will have factored in numbers they've seen. So around this time, we normally would not see big pushes on the equity market or major changes in price or major price movements on the equity market.